All right, welcome back. Let's get into this. So, live on YouTube. I know it's a rare occasion, but what we're going to do today is, I think, an important conversation, especially when mining right now is less than profitable for a majority of at least the smaller miners for sure, and anybody that does not have some kind of lower cost when it comes to the power cost and operations cost of running mining. And this goes across the board. It doesn't matter if it's Ethereum. It doesn't matter if it's Ethereum Classic, Zcash. If you're using an ASIC, if you're not using an ASIC, this is kind of an irrelevant conversation when it comes to just general profitability on mining. And most of all of that has to do with the difficulty. Difficulty is an adjustment on any blockchain that when you have a lot of mining power coming to it, what does the difficulty go to adjust to ensure block time is kept at whatever the currency's settings are. So if, like, for Bitcoin, to try to predicate blocks every 10 minutes. So it adjusts the difficulty based on the amount of hash power that comes on there. The net of all the things that are going on in the background, how it affects a particular miner, is at the end of the day, you get less currency. You get less of the coin for your available hash. Your costs are pretty much fixed. You have your core cap cost of what you bought your equipment for, your facility, if it's your house. Your electric rates are usually the same unless you have some kind of variable or adjustment rate overnight or on weekends. But your costs are pretty much fixed and they're pretty constant, right? So when you have that kind of situation, and cryptocurrency gets a huge amount of people on it, and the difficulty goes up, but the prices come down, your profitability goes way, way down. And a lot of the questions I get by hosting a lot of different videos on how to mine is like, hey, it's too unprofitable. I got to shut off my rigs because of my particular situation, which by and large is a true statement. But just divesting your equipment and getting out of that space, when you look at the vast majority that also do the same thing, also causes the difficulty to decrease. And what we're going to do today is I'm going to pull up, we'll use Ethereum as a baseline, and then we can apply that to other cryptocurrencies to say that if you are mining, you're in a kind of a home style setup to where you have 3 or 4 rigs, and you just can't compete with the big guys. I want to kind of let you in on how to watch for difficulty decreases, which give you more currency. Most of the time people see that as like, well, profitability goes up because I get more coin. The coin's worth a certain amount of money. I should be able to see that just in general profitability. But there's a little more to that strategy. And I want to make sure that people, at least that follow, my channel, that part of what I can bring to you guys is to make sure you understand on what to look for, and see some of that trend, because you have essentially this pendulum that shifts when difficulty adjusts. Some coins have, they'll adjust difficulty every block, every other block, every few blocks. Some do it after so many blocks. So when you have a pretty decent decrease, there's periods of time to where the hash power that you're putting onto that network, you'll get more coin for, because the difficulty is lower. And I'm seeing that right now with Ethereum, where people are like, there's no way you could be profitable with Ethereum right now at like $170. But with Ethereum dropping almost 20% in difficulty over the last 90 days, it still keeps it within that kind of profitable area if you have like 8 cents per kilowatt to 6 cents per kilowatt, power cost. So and as larger farms take the pressure and the heat of the pricing, because they have different operations expenses, it's not just about the power cost, because larger operations have a lot more other costs than just power costs. Where if you're at home and you have miners setting at home, and I'll use an example of this kind of home setup right now. Like, let's do a close up here. So if I zoom out, that's zooming in. If I zoom out and look at just like those rigs over there, like I have 3 rigs over there, actually 4 rigs. There's one right over there. In this kind of setup, on a typical home setup, you have a situation where you guys have where you have to probably turn off your rigs because of your power costs. But as larger rigs or larger farms start to shut off their situation because the power cost isn't all the cost that they have, you have periods of time, like 14-day periods, where sometimes difficulty will drop well below and you'll actually be more profitable for that period of time. And I'm going to take you through kind of how to look for those particular things. And how the scale, pivots with, profitability. So as one coin starts to get all the, like Ravencoin had a lot of hash power move over to it in the last, 3-4 weeks, whenever it went up to 1,000 Satoshis, part of that relief on the ETH network to drop it 20% in difficulty was because a lot of people moving over to other currencies. And during that time, while Ravencoin's the hotness right now for mining because of its Satoshi level that it was, people that stayed on Ethereum got 20% more Ethereum. And if Ethereum does that pendulum switch to where it starts to lift back up to $300, then that period of time that you were mining was actually more profitable than potentially something like Ravencoin at that point in time, right? So that's what it comes down to. It's a strategy. It's not just about following the herd on real-time profitability. It's looking at a strategy of how many coins can you get for your effort, right? So, and what's the longer term? If you made a multi-$1,000 investment, $10,000 in mining equipment, and you were just doing it for that 1 month of profitability, then that's not necessarily a long-term sound strategy. And try to understand that sunk cost that you have in that equipment can be pivoted to other coins, and you can gain the amount of those coins at a higher rate if the difficulty is a lot lower. So let me bring you guys to something, kind of just a basic walkthrough. So what we're going to do is I'm going to walk you guys through, and I see you guys' chat. I'll get to some chat here. Let me go to the computer here. And there's also strategies that we could talk through when it comes to like buying certain coin with that power cost. Let's open up Excel and just have this open. And then what we're going to do is I'm going to make sure you guys can see this. Let me go to where I can see it larger to make sure. And what I'll do is I'll make this available, this spreadsheet, after we're done messing with it. If you guys want this. So what we're going to do is we're going to do a search for Ethereum difficulty chart. And we're going to look at the hash. Not that one. I don't want that one. That one's weak. And we're going to look at the hash. Not that one. This one kind of shows you this one shows you a basic, and it gives you the difficulty change. So right now, 90-day difficulty change is 11%. This 7-day difficulty chart going up 2% is a lot due to other currencies dropping in value to where Ethereum becomes profitable again for some. Let's see here. Let's do Ethereum difficulty. And what we want is this one, the block difficulty page here. And you can see the kind of trend going down, this downward trend of difficulty, which is how much you get coin-wise. But we're going to bring up the CSV here. And then we're also going to grab the CSV for hash power. We're also going to grab the CSV for the hash rate. And it's good to kind of understand on how, like, these numbers as a whole is fine, but the reality is these numbers as a whole is fine. Here, let's do the reality is this CSV file here. Here, we'll start with this one. This CSV file here. That's fine. Don't show again. So this drops this to Excel, which gives you just a couple basic values. This value here is in gigahash for the Ethereum network. And you can see on 7/30/2015 is when it first started. You don't need this UTX timestamp. This is essentially this date, just in the Unix timestamp, and you'd have to do a formula to convert it, which eventually will give you this. But we're going to delete that for right now because we don't need that. And then what we're going to do is let's just take a typical 6-card, 6X, 480 rig, which let's just assume that that's 28 point equals 28 point 28.7 times 6. That's 172. Let's just do 172 as the basic rig. And let's do equals this divided by 0.1722. Okay, so what that is that's 172 megahash, and that's gigahash. So on the very first day of Ethereum, essentially that was equivalent to 66 rigs of 6-card rigs. That was the equivalent, and most of that was CPU at the time, right? Because the Ethash didn't have any kind of optimized rigs. And I mean, this was I'm doing this leveling because this 172 is pretty much a true statement going forward, but it gives you kind of a basic idea. 172 is pretty much a true statement. You guys getting echoes? But it gives you kind of a basic idea. Echo, echo, echo. You guys getting echoes? Weird. Echo, echo. Hold on. Weird. Hold on. Mic setup. Close-up cam. There we go. Got it. How about now? That should have fixed it. There we go. Echo should be gone. All right. Yeah, I was picking up this camera here. Yeah, it's all good now. Thanks for telling me, Echo, guys. I should have been looking over there. I need something where somebody can ping me. All right, so what we can do now, having that, is we can go through and just double-click that, and then that's going to tell us how many rigs equivalent went up, and we can get a basic idea of how big the scale of Ethereum got. And then what we can do here is understand that's how many rigs, right? So let's do a simple division of this, divide it by let's do, if we were equivalating that to the card, the amount of hash power per card, 28.7. No, not that way. It's times. That's how many rigs. We times this by cards of 6 times 6. So about 8.5 million cards on the Ethereum network right now. If they averaged a hash rate of 28.7. Let's do that. There you go. That's how many GPUs, and let's take that equation and come down with it. So we can see, so that's about 400 GPUs in the start of Ethereum, and you can see quickly how it expanded. And then you can see, roughly, and this is just estimating if they were 28.7 per card. So you can see for a little bit there, 9.2 million. We broke into 10 million a few times. Lots of 10 millions. But you can see the ebb and flow of mining rigs that come on and off Ethereum. And right now we're at about 8.5 versus, the 10 million. So, I mean, about 2.5 million GPUs being turned off roughly on Ethereum since their kind of peak. So you can see this downward trend. Now what that means is at the peak, if you had that rig and you were mining at the peak, your amount of ETH that you were getting was far less, right? And 25% less ETH. So right now a rig like that, 172 megahash, earn about 0.45 ETH a month. Now ETH at $170, that's not much money. It's going to cost you roughly $60 in power, $70 in power in cost, depending if you're at like 12 cents per kilowatt, and you're earning, maybe $90. So then that means you're only making about $30 a month, like for a full rig, which after you look at, rig stability and all that stuff, you're probably just breaking even because power is constant, right? So, and that's if, your 2% that you're paying your mining farm and that. So your pool and all that. So the reality is you probably end up with 0.37 coins per month. But at your peak, you are earning about 0.2. So now you're earning about 0.37-ish. And what to look for here is as the pressure or the cost incurred by the larger farms, they start to either pivot to a more profitable coin or they shut off. This number continuously decreases, which at the end of the day, you just get more Ethereum. Now, if Ethereum stays low, then that's kind of a moot point for profitability, but it's more the long term. It's about the accumulation of Ethereum. It's about the accumulation of any other coin. And if you can hold as much as you can until it comes to a more sensible pricing, then it's the time value money equation that you're looking at of when does it make sense to sell? And like for larger farms, like our farm, our 2500 GPU farm, right now we have to sell to keep it alive. And that's a lot of the bigger farms have to do that. But the home farms can act a little differently. It's kind of like a 401k in a way, to where you're putting money into a 401k and you're taking that chance that the market and everything else is going to go up. And you have different levels of risk. Cryptocurrency obviously would be a high risk, potentially high reward, but very high risk because of the volatility of it. But if you look at that over a long period of time, that's where all the space has been, pointing people to, of saying, if the future is cryptocurrencies, the ability to transact without, the trust layer, to where I can happily transact with anybody I know, Ethereum, and I have absolute confidence when I submit Ethereum to them or Bitcoin to them that they're going to get it as a counterparty. And them as a receiver, they have no doubt that they're going to get it too. There's a transaction state that's different than like if I was doing it through, a bank or through even like something like PayPal, because PayPal can stop that transaction. That's the difference. Like I have this conversation with people a lot of like, well, I see that you're mining and you're spending all this money on equipment, and the mining part of it's a hedge. It's always been a hedge. It's a hedge right now. Like we have sunk cost in mining and huge amounts of decrease. If I was buying currency that entire time and just buying currency, no doubt my currency would be down 90% to it from its peak. If I was buying even dollar cost averaging all the way up through that peak, my currency's down 90%. So then if I need to exercise any of that revenue or any of that money, I am having to sell at its lowest point. To where mining is a little different. Mining's different because you buy equipment and you feed it power and you receive a token for that service, and you're getting it incrementally in good times and in bad. And the snap of the line of when you've received that takes a snap of its current cost, right? So like I'm earning Ethereum right now with, 5 rigs here, and that'll be like 1.5 Ethereum per month, right? So 1.5 Ethereum at $170. If I sold that right there, my cost versus what I sold it for is that $170. If I hodl it, then the net change in gross revenue comes in from its growth because I didn't sell it, but I snapped the line when I received it of what it is. So it allows you to get it over time in a different way, and it gives you that cost risk aversion of you're not just buying cryptocurrency and just hodling it. You're participating in the network, and you have a hedged risk on mining. And a lot of people get confused on that, and they're shooting straight for the stars, thinking that it's going to be this long term or this short term quick profit. And in reality, it's a longer term kind of play, right? And in times like this, when it's not profitable for a lot of folks, and if they need that money right now, they at least have, while their equipment may have came down in cost somewhat, because depending, especially when they bought equipment, most of like the 480s and 570s and stuff that we got were in the mid 200s. Some people unfortunately had to buy them at 349 because there was no supply. Now you're going to sell a 570 right now for about 110 bucks, 115 bucks, right? That's what the going price is right now on eBay and everything else. So you're taking almost a 50% loss if you bought it at 250. But it's not a 90% loss if you had to sell the coin, right? And that's the whole thing, is you can always buy equipment, stays pretty linear cost-wise, to where, in 6 months, if the market starts to recover, and when the market recovers, depending on the difficulty, if the difficulty is where it's at now, and then there's a huge sharp increase in profitability of the coins, unless the difficulty immediately adjusts, which some currencies it doesn't, you don't get, you get this kind of delayed effect with mining. Like your rigs become far more profitable right now. So if you're starting to sell that currency because you're getting a certain amount, that's pretty consistent, because it's consistent against its difficulty, you're able to recoup faster than people that are buying on the way up, right? It's just a different approach, right? And most people, I'm not a financial advisor, but I'm going to tell people that it's always been, and then people wonder why we still mine, is that it's always been consistent, at least from the fact of the equipment. Like if I need to divest equipment, I can. Like there's other purposes for it. And that's the whole reason why people come back and ask why we don't mess with ASICs. I did mess with ASICs in 2013, 2014. And what I found was when there was a huge decrease in price and still a huge increase in difficulty because there was ASICs, because it drove up exponentially, the ASICs became bricks. Like I couldn't sell them. My, ant miners at the time, the S2s, I think it was S2s, and then, the 5 terahash, $3,000 ASICs that were from, not Inesilon, it was, there was another company out there. There's so many different ones. KNC miner. All of those miners were essentially worthless at the time. Like you couldn't sell them for remotely near what you paid for them. But the GPUs, the 290s, heck, even the older ones, the 7990 dual card, that card was $700 when it came out, and I actually, because the 7990 was a dual GPU, I actually got the same amount of money for it from somebody that wanted it from a gaming standpoint. So it's just a different hedge. People always are confused with that, and I'm trying to make sure that people understand difficulty in this space and watching for it, because there's times that you'll get more currency by being able to switch to it. I'm going to look at some of your guys' questions, and then what's he even talking about? What's he even talking about? My miner makes an apartment warm, and I get $1.03 net profit in the day. That's why I'm holding them. Yes. So there's about a time to sell, when a good time to sell is. It just depends on your situation. If you can use this as a whole situation to where it's all about the amount of currency you're getting. So it's people always switch it to USD, and if it's a strategy where you have a lot of rigs and you need to convert it to USD, it becomes more of a profitability of staying profitable to be able to continue to mine. And it seems like you're not winning the race. You're just mining, and then you're immediately converting it, and you're like, why am I wasting all this time? Because it's not really worth it. That's where you get that discouragement, right? But if you're looking at a more strategy of like, I have a sunk cost in equipment, that equipment's always going to still have value, and I'm able to get so many coins per day, so many, you look at the coin that you're getting, and then look at its potential from not just where it's been, but like as market adoption reoccurs, which market adoption is going to reoccur. Like that, there's no speculative FUD that's going to not have people transact with cryptocurrencies. Like none. Like the simple use case has never changed. The fact that me or you, anybody, 120 people watching this, can make a transaction with each other without any real friction at all. That use case is what's disrupted. That's why the market's $200 billion. That's why it's going to continue to go up. Is the fact that the friction is that use case is there. Like we can rely on a series of mathematics. And yes, there's gaming on people manipulating the tech with regards to like selfish mining and all this. Any kind of new tech is going to be attacked in all kinds of different ways. And the best thing that can occur is that it happens to where we can make changes to it and we can make adjustments for it and we can learn from it, right? But the fact of the matter is no matter what negative effects come from that kind of stuff, doesn't stop the fact that if I have Bitcoin, Ethereum, or anything, and I want to transact with somebody, I can. And it's permissionless in that concept. That has a lot of innate value. And, you know, I've been on several committees. I've talked to several people, and people that post up like, well, I could do that with PayPal. I could do that with Circle. I could do that with, if I'm going through a third party intermediary, it can be seized. It can be stopped for whatever reason. Like if you're doing something illicit and illegal, you know, there's third parties that can stop that. And if you're doing it just to transact and then somebody comes in and tries to prevent it for whatever reason because they want to buy it, not you, or there's use cases of why being able to transact with each other without a third party is a huge deal. Like we should have that. And then if you want to capture and have litigation and any kind of laws and stuff around that, you can have it at the payment gateways at the conversion of USD, right? But the fact that we can exchange value between cryptocurrency, that's a very powerful thing. And it's not just about, you know, United States interest. It's about the world interest, right? People can make that transaction. And I'm not going to give you some crazy use case in Uganda or something like that. It's just the fact that if you strip it all away, that's a powerful and in a true, most pure sense. So the basic use case of cryptos there, it's going to stay there. The adoption of new tech and innovation on it as people start to peel it back is going to offer new innovation on what's available out there. So those particular platforms that facilitate that, which like Ethereum, and a lot of people punch holes through Ethereum, punch holes through EOS. EOS is a distributed proof of stake setup, but all of those are platforms that people can build things on. So those are currencies like that I can mine, keep me as a vested interest. So Ubik, Ravencoin, Bitcoin, because I do still have a couple old ASIC miners that, believe it or not, became profitable for just a period of time in December. Not anymore, but any of those coins that I can mine and participate in and hold that network up, then, you know, I'm going to participate in and make sure that you guys understand on how to, you know, keep track of it. Let's look at the difficulty too. So difficulty is adjust, but not one-to-one, because Ethereum doesn't change its difficulty on every block. So meaning like you can have huge swings in difficulty. That wasn't that one. We didn't open the difficulty one here. Here's the block difficulty. Should be opening. Here we go. So you can see the difficulty here where it was, and now almost 3,000% higher, over 3,000% higher. But even here, you can see difficulty was, I want to say about 3,500, 3,600 was its highest peak. And again, this is the essential, the variable that determines what your hash power effect is essentially in the ability to get more coin. Like this adjusts the problems, the actual math problem on the proof of work side to make the problem more difficult to try to keep the block time in check. That's all this essentially does. How it affects you as a miner is literally how much currency, how much of the cryptocurrency that you earn per hash power. Like the higher the difficulty, the less amount of coin you get for your hash power. The figure of how much hash power on there is used in determining the difficulty. So that's how those two are connected. So as this starts to go up, this starts to adjust, right, based on a certain amount of blocks. And you can have these periods where you can have huge difficulty swings. As more tech and more information is made available to the mining pools and then the auto switching algorithms that are out there to ensure that you're mining the most profitable coin. As that information becomes more readily available, then you end up having situations like spot prices for hash power for like nice hash. So that's how all this kind of pulls together to where as you got websites that parse in difficulty and total hash power, it will start to auto figure out based on multiple coins, here's the most profitable at this time. As the mining farms get more elaborate with regards to reading in that information and taking their own pulse of the network when they go out to fetch a new block, especially if they're doing their own, if they're doing solo mining, and they're essentially getting from Stratum the here's the current difficulty right now, and here's the problem set I need you to work on to try to find that unique hash to be able to write the next block. As the tech and the mining pools and the tech and the large hashing conglomerates focus on that, you're going to have this pendulum effect of mining farms going to most profitable coin situations, right? And that's kind of why you get these huge swings of difficulty right now. But as the whole crypto market drops in price, it creates a kind of an issue. And it creates an issue because a lot of the larger farms have to actually power down. And while the home farms probably powered down just before that, what I'm trying to communicate to you guys is that if you pay attention to the hash rates and you pay attention to not just the profitability charts, because the profitability is just calculating what's most profitable right now. But if you really look at the fact that, because one coin's higher in value, and so it's going to be more profitable at the current time, you may have like a 30 to 40% decrease in the amount of hash power on a network, which drops the difficulty of a network quite a bit, to where you get this unique situation where even though the price is very low, the hash per power that you can put onto that network, you're going to get a lot more coin that you were getting before. And I mean, there's ETC. I've seen this. I've seen like right now, ETC is way low, like being $7, and the amount of ETC, we can come here and look, Ethereum Classic difficulty, to where you still have a coin that's a higher right now, to where sometimes there's strategies to where you can see that, hey, the difficulty is down 40%. I can get a lot more ETC right now, even though it's only $7. I still believe in that coin more. You can actually get a lot more of that currency for your hash power, and then when that price swings back up, because maybe that's the flavor of the day, you would have accurately predicted a good use of your mining equipment for that period of time, even though it wasn't necessarily the most profitable. And people send me questions like, hey dude, like how do you stay afloat in these kind of situations? And what I'm giving you guys is the secret sauce. I'm giving you the secret sauce of saying it's not about real-time profitability all the time. It's about understanding what the projects are, understanding the long-term value on it, and then taking advantage of the mining difficulty swings, because some people are just predicated on real-time price. And for the few that are out there, the 130 of you guys that are watching, probably the couple thousand that'll end up watching this video, you guys at least to see how I'm approaching it. Is it right, wrong, or indifferent? I mean, it's questionable, but being in the space for as long as I've been, having this channel since 2013, been mining since 2011, I'm just, there was time and period that I was doing a lot of Litecoin when it wasn't the most profitable thing. At the time when I was doing a lot of Litecoin, Dogecoin honestly was probably the best at the time, but I didn't have a lot of faith in Doge because it was a meme coin, right? But a lot of people were mining Doge because it was profitable at the time, more profitable, but I just focused on Litecoin, right? And that ended up paying off, in December of 2017, right? And that's the kind of stuff I'm talking about, is like, if Ethereum Classic's doing real things to try to have a true distributed consensus mining network that's hosting applications that right now don't have a lot of transaction cycle time, because people are still refining the real requirements that are out there, that maybe that's a better play. Let's see here, that's not the difficulty chart that I wanted. Let's do this one, and let's switch over to computer. You're the size that you need to speculate mine. Poor Doge. Hey man, you know what? I don't have a problem with Doge. I like Doge, and I transact when I get people into the mining, or not even mining. If I get people into cryptocurrency and just explain stuff, usually the coin that I send to them is Doge, just to get them an understanding of like what's going on. and like how to transact and the risk, the difficulty risk. Say right here. So 20% decrease right now. And a lot of these decreases are succinct because of the mining algorithms that are out there with the profitability algorithms that are out there. So if one goes too far and they're falling together, let me explain this. So because of the analytics that are being applied into this space and because of the investments that have been made, essentially it's an algorithmic world when it comes to mining by and large. So like as currencies drop in price, you have this kind of equilibrium that occurs that if one hasn't dropped enough, like if you notice most of them have dropped like 20%, the algorithm stays succinct as long as their price and their difficulty drop pretty much in sync. So let's do... So if I take ETH Classic, Ubiq, and Raven, if their prices and their difficulty all drop roughly about the same amount, then their profitability part of that algorithm is going to stay pretty succinct, meaning if one's more profitable one day than the other, it's going to burn on that where all the hash power is going to go onto it, or a majority of the auto switching hash power is going to move to it. It's going to drive up the difficulty, which reduces the amount of coins that you get, and then people are going to dump price because they got to dump the coin because they're a large mining operation. They got to pay for their ends. So you have this natural suppression of sell on the higher cost coins while you have the drive up in difficulty, which then equalizes it down, and you have this kind of pendulum switching between all the different coins. You do get situations though where for whatever reason a coin may drop pretty significant in price, and even though the difficulties drop 30%, the price has dropped so much lower that you now have a situation where the algorithm starts ignoring, like let's say Ubiq, because Ubiq was at $6 and now Ubiq is at let's say 90 cents, 50 cents, which was like more than like a huge drop, like 95%, 97%, something like that. Like massive drop from like I think it went up to almost $7, and now it's like 50 cents or something, to where you can have like more than a halving of the difficulty, if not, 70% in difficulty adjustment, to where now per hash power, you're going to be getting a huge amount more Ubiq because there's a loss in confidence or whatever in that network. But Ubiq's a platform, and Ubiq can inherit anything that Ethereum's, puts out there. So if Ethereum moves to adding Z-snarks and adding in some newer tech, sharding and all that, and then Ubiq can inherit that and then show, hey, we can do that, but at a lower cost, and you can deploy your dApp here, and then now Ubiq becomes the new hotness, right? So because it's like, oh, cool, I can do everything I could do on Ethereum, but I could do it also on Ubiq, and Ubiq's a heck of a lot cheaper. And then you'll have this natural swing up to where it'll go the whole time you've been mining, you're in this like triangle area where you're just accumulating coins. And then you have a point in time where you don't have to sell as much because you just paid for your mining. Again, like people get real freaked out. They're like, oh, miners, all they do is sell. It's like we're providing a service, and for that service, we get a coin. And that coin we can use to transact for other stuff, other mining equipment, or we can pay for our power, or we can take profit like anybody else that's an investor in buying a coin and selling. So you should never feel compelled not to take some level of profit. That's part of what we're doing as a service, right? So we're providing the network infrastructure, the processing infrastructure for proof of stake or proof of work, right? The same as if somebody was investing in a coin and putting it into a masternode, and their investment is driving consensus through the masternode architecture, right? If you're a service provider, you're paid for your... There's no gray area there. Like I have like these interesting debates sometimes on the side where, like guys, like who... Like you have to take some... You have to sell some of it. Like on the larger farm, yeah, I've seen Dave CA or California saying, how much is the monthly bill. It's anywhere from 17 to 20,000. So depending if we had to do some kind of air conditioning. Right now it's cool, so it's about 17,000 a month to run 2,500 GPUs. And, you know, peak profitabilities, you know, in December and stuff could be, you know, in the hundreds of thousands, right? But in like times right now when the profitability is barely making profit, are barely making the utility cost, you're more like 18 grand, right? So there's not much play there, right, to run the farm. It's essentially everything you mine, you got to sell to keep the farm on, or you make a tactical decision to shut off the farm and do more tactical, just use a quarter of the rigs on more highly speculative stuff, right? I mean, there's a strategy you got to do with that, but what I'm giving you is it doesn't matter what size. If you're one rig, if you're one card, one GPU, right? This is essentially, it's just the amount of currency that you're getting. Instead of getting a full unit, you're getting 0.004, right? It still doesn't get around the fact that it's just amount of currency that you have and being able to transact. I'm going to read some of your guys' comments here. Is this stuff valuable to you guys? I haven't done a YouTube video in a while. Most of the stuff's on Twitch because the interaction on Twitch, the video quality, even though I've done a lot to try to get the YouTube like Twitch, where the codecs, I'm running a different codec on Streamlabs to make sure the quality is clear and crisp, that the audio is right. Obviously, I had one little audio issue in the middle of this, but if you guys like the content on YouTube, I mean, I can do a couple videos a time on YouTube and try to just use Twitch as like the video breakdowns on stuff. Like I'm going to be on Twitch later today because I'm going to be going through a couple of the rigs and getting them set up with something else. So, you know, just trying to understand the way difficulty moves and watching that. If you're a miner and you have a capital cost, you have spent real money to buy a piece of equipment to do a function. And with that comes the strategy of what you're trying to accomplish. If you're just trying to run numbers and profitability, you're going to be chasing with the herd. It's more of a strategy of understanding what is the ultimate value in the currencies. You know, I'm very bullish on platform currencies because I can build things on top of them, right? Ethereum, EOS has a lot of governance stuff that people are starting to learn and understand. But I think it has a place. A lot of people don't agree with me on that, but I think it does have a place. Like full decentralization and control is one thing, and I think that there's huge amounts of value in that. That's why I wholeheartedly have always been respectful and dedicated to ensure that Bitcoin has its best chance too, right? I mean, Bitcoin needs to have it. It serves a purpose. It's very disruptive. It's very good. The Ethereum from a platform standpoint, Ubik, Ravencoin, all these platform-based currencies that allow people to build things on top of them to help not just transact financially with each other in an immutable participant kind of fashion, but also takes that concept to information, right? To where I can store property records. I can store things and challenge the questions of status quo of saying maybe there's a better way to do things, right? And that I could put that onto a public and go through the questions that are there, you know, discoverable information and, you know, like the European GPR or GDPR, GDRP, you know, like those questions that need to be answered with the right to be forgotten and all that kind of stuff. That stuff needs to be figured out, but at least there's a platform that you can figure that out and have those iterations of failure, learn from them, and then ultimately build something in a distributed fashion. I think Ethereum, Ubik, the Ravencoin, things that I can mine, things that I can contribute in, because then I have a copy of the ledger. I can run a full node. I can validate transactions and build architecture on top of that to validate that node and the participants are playing ball right. That's why it's valuable to have that kind of space in there. EOS having a challenge of a different governance model to where you have some level of centralization between a distributed set of parties. And then you have, I think there's going to be use cases where people are going to be less opt to moving to a platform that's fully controlled by the network and limited amounts of smart contracts to having one that's kind of bridge in the middle to where it's not full on governance process, centralized control. It is it's a distributed centralization, which means that you have to at least have a quorum of people that have to agree on some stuff, right? Now, there's a whole bunch of challenges in that, because most of the time when you have a room full of people, you'll have interest between each other, and then it ends up becoming into kind of like a, I would call it kind of like a Congress type of thing, for like the U.S. Congress type of thing, where you have Democrats and Republican people talking across the aisle. You still have a quorum of people that have to argue about things, right? And if you're doing that in a transparent way that people can audit it, that's at least one step ahead, right? So like the EOS platform, that's an idea that kind of bridges the gap between the two. So platform things I think are very valuable and very important, because it allows people to, fail fast and make things. So that's why, supporting it and mining particular currencies and hodling particular currencies. It isn't hodling for just like, oh, someday it's going to be worth millions of dollars. It's hodling it saying that someday the effort that we're putting into it becomes worth it to where it made sense to hodl it and then divest some of it, right? Because, that was earned effort by you taking a chance on the space. I'm going to read some questions, guys, before I wrap this one up. And I'll be doing a live stream. I'll do a live stream later for folks on Twitch. If you guys don't follow me on Twitch, it's Bittree Trippin'. You can just go there and follow. And I'll get into. I'm actually doing a couple things today. I'm going to be testing out the new Gigabyte GA H1110. It's a 6-card motherboard. I have a thing for that. And then just testing out a few different cards. I got the RX 590 coming in. I might be actually here today. So it's the new ATI RX 580 or 590. I got the Power Color one coming. So we'll test out the 590. I'm gonna actually pull the BIOS off there, try to do some hacking on that, and see if I can speed it up. And then I got a couple other rigs that I'm gonna be doing stuff for. So let me see if you guys have any direct questions. What are you currently mining? I'm mining a couple things right now. Ethereum Classic right now. I do still have most of the farm on Ethereum, just because our power's pretty decent, and my NVIDIA rigs are still on Raven, even though that's came way down in price. And there's a couple videos. I do have a video that's going to be uploaded from the ETH DevCon. I'll be putting that up on Twitch, or sorry, on YouTube. So I have two videos. I have kind of like a vlog style video that's coming up that just has some music and kind of shows the ETH DevCon. And then I have one that kind of breaks down with a voiceover on some of the different things that I went to, and then some of the conversations that were had at the DevCon there in Prague. So I was out in Prague, and it was good. I was mining Monero. Let's see here. Right before I went to DevCon. I'm not mining Ubik right now. I need to look at Ubik again. I mined quite a bit of Ubik. So I do a hedge of a lot of different things. I was mining Monero there for a little bit. And I'm going to be looking at BitTube. I did a poll on Twitch, or on Twitter, sorry, if people wanted to know more about BitTube, decentralized kind of YouTube, and like around the mining aspect of that. How do you make money on there if you're a contributor, like a participant? But I'm trying to look to see if I'm just going to do BitTube, or if I'm going to just do both of the platforms out there, which would be like the Steemit Tube platform too. Yeah, and like the comment with like Ubik, guys, I mean, like the platforms, there's not going to be just one winner on this. I mean, look at, this is one comment that I've made on a few times that I've given, speeches and discussing on the space. There isn't going to be just one coin, in the same fashion that there just isn't one company in the world, right? I mean, there is use cases upon use cases upon interoperability. You don't always want to put all your eggs in one basket anyways. I mean, that's just not a good thing to do. You should have some kind of diversification, not just on currency and value, but just on the information. So look at what these platforms are providing. Yes, they're a cryptocurrency because that's how it functions with regards to transaction and gas and those kind of costs. But the platforms that are going to be built on these, the applications, the middleware, the database architecture, the security side of that is information. And in there, with that stuff being in information, if you have interoperability between coins, you're going to have this unique situation where you have something like Ethereum and then all the derivatives that came off of Ethereum where people had forked the original, Ethereum code base and then created their own platform, but they stay interoperable like Ubiq, like Music Coin, like all these different currencies that took that main code base can take in, the smart contract updates, the sharding, all that kind of stuff, and then stay interoperable with each other to where you can have a deployment on Ethereum that ends up being a really strong application because somebody finally starts to deploy something that makes sense on it. And then have that interoperability with something like Ubiq, so where they can say, hey, we're available here and here for interoperability reasons, right? So there's the platforms. You got to look at a bigger picture than just the currency. Mining Etash with 470s. Yes. Yeah, the RX 470s in 4 days I have are 28.4 mega hash on there. He sets up a pool. I'll try it. Yeah, I've stayed away from the pool. I mean, we have Hodl Pool, which is on their support channels on our Discord, and Kibbles runs that. So I mean, I have direct access to Kibbles to talk to him if something's up with it or anything. So if you guys are doing Ubiq, Hodl Pool supports on our channel, but it's not my pool. Lifespan and temps on GPU. So on the 470s and 480s that we have, the temperatures are like right now are anywhere from 55 to 65 Celsius. Fan speeds are at 30%. I try not to run the fan speeds high, man. I ran fan speeds on 290s for almost 2 years and started losing fans after 2 years on a lot of the 290s. And the 290s were expensive in power, man. And the 280Xs, man. The old RX, our R9 280X tri fans. We are suffocating, Carter. Yeah, it's pretty rough right now, man, especially if you don't have a good power cost. It might be time to power them down for a bit for some folks, but just... If you didn't catch the video in the beginning, just rewatch this, and we're gonna wrap this one up. Again, I'll be on Twitch a little bit later. Right now I'm targeting probably 2 hours because at about 4:30, 5 o'clock, I'm gonna spend some time with the fam. So but I am gonna be working PC, a couple rig stuff here, and we'll have the close up cam and all that kind of stuff on it. And yeah. If you guys got any questions, put them down in the comments. I'll try to answer them, and hopefully this was good stuff for you guys. BBT want to create an asset. I did not create the asset BBT. I do have Bitsby Trippin asset on Ravencoin, and I've been looking to. I made it a fixed asset, which means I can't change the amount. I think I made 2,100 of them. Yeah, I want to look in there. I think I only made 2,100. BBT asset or Bitsby Trippin assets on there, which means there will only ever be 2,100. And then as part of my Twitch viewers and stuff, we'll give those out. So it's not worth, I mean, like this isn't like an ICO. It's not worth anything. It's up to what people want to hold as like a collectible. It'd be equivalent to me giving you guys pins that say BBT, but there's only 2,100 of them that will ever be on the Ravencoin network that I created. And I'm going to be giving those out as like, just like collectibles, assets on Ravencoin with the people that come over to Twitch. So, yeah, it's just unique. I mean, there'll never be any other, Bitsby Trippin tokens, because I created them. So, and again, they're all free. So, and if you guys choose to do something with them, that's up to you. So, yeah, the RX 590 is not in yet. Lifespan on GPUs, pretty good. I mined Bitcoin with a 57. Here's, I got one right here. These two GPUs mined Bitcoin in 2011 through mid 2012, and they still function fine. That is an Asus 6970, and this is a 7800 series, an old 7850 Ghost, and this mined Bitcoin and Litecoin for about 3 years, and both of them still work. So lifespan of a GPU, very good. Like, just take care of them, air blow them out, and you're good. So if I see you guys over at Twitch, that's cool. If not, you just we'll see you next time on YouTube. I'm gonna try to do at least one YouTube video a week on YouTube and bring stuff to you guys on that. And we'll probably end up doing the RX RX 590 on YouTube also. So and yeah, we'll catch you guys in a bit. Peace.